And joining me on the podcast and on video is Russ Mould, Investment Director at Stockbroker AJ Bell. You're right, Russ?
Hey, I'm very well, Justin. How are you? Are you okay?
Yeah, it's funny just
Good.
getting back into it, isn't it, after
Yeah,
a
that's
week
me.
away or
Yeah, I
so.
think we both had a
Yeah.
week off, didn't we? So
Yes. Nice week?
very good. Yeah, went to Milan to see Bruce Springsteen and he cancelled. So that was all good.
Does he know you were coming along?
Well,
What's wrong with him?
he just didn't cancel on. He cancelled two shows in Milan, one in Prague and one in Marseille. So he got a cold and lost his voice. So
That's annoying.
it's all right. We had a good time in Milan. We had a good time in Milan anyway. Went to the Ferrari Museum in Maranello, and so it was all good. So I put an order in for you, by the way, for the Ferrari.
Yeah. Couple for yourself, couple for me. Yeah, yeah, exactly. So how far is that from Milan?
Milan to Modena is about 160 kilometers, and then it's another 30 kilometers to Maranello. So it's a bit of a faddle to get to, if the truth be told.
Okay. Did you hire a car?
No, we actually got the train.
Oh, okay.
We took the Frecciarossa, the Red Arrow, which gets up to 250 kilometers an hour when it's not crawling through the Milanese suburbs. So it was about it should have been in a 75-minute train journey. It was about an hour and a half by the time it had finished fiddling about, but it wasn't too bad.
Because in Italy, I think a lot of them in Milan think they are like Ferrari drivers, even though if they haven't got the Ferrari itself.
There was a bit of that. Yes, there was a bit of that as well. But it was all good. Thank you.
Yeah, do you know what? I'm talking, hearing signs, positive signs, but in fact, the UK market's not dead. Things are happening, and we've got a couple of sort of IPOs. Happening.
Yeah, I mean, there have been 6 IPOs in the UK this year so far, which isn't very many given that it's now June. But the average gain's been about 40%, albeit heavily skewed, I should add, to a company called MicroCap. Air Astana is the one that's probably done least well of all of them. So just the 6 deals, but at least they haven't been absolute rubbish. A couple of VCTs in there. I guess what's getting people excited now is that you've got potentially Shein, the Chinese fast fashion retailer, and Raspberry Pi, the British mini or microcomputer company, both of which look to be growing extremely quickly. So that will be an interesting test, given all of the views, say, the gnashing of teeth and wailing that there's been about the UK doesn't have these fast-growing companies. So it'll be an interesting test of appetite there. I mean, Shein is potentially going to be really quite big. Its last private transaction valued the thing at £50 billion, which would make it one of the probably 2 or 3 biggest IPOs in the UK of all time by overall market cap.
Yeah.
And I think they're talking about raising about £1 billion, which isn't going to make it the biggest. I mean, Glencore raised a lot more than that. That raised about £6 billion back in 2011. And French Provident and Standard Life and THG were all £2 billion plus. But nevertheless, it'll be it's a decent sized deal. I'm sure the London Stock Exchange is pleased to get, I mean, the fees to the LSE don't really matter that much. That's a small part of the business. It's more of a data company, but to get a high profile deal will be seen as positive. I guess that an international deal will be seen as a positive. I guess the caveat to that is you may remember there were an awful lot of Chinese companies floated on AIM between 2005 and 2010-12 and didn't generally end that well, if the truth be told. So I think that's possibly the one caveat. And I guess if Shein passes the London regulatory process in terms of governance, in terms of supply chain management and related issues, then you would say fair play to them. But I think there will be some fairly substantial scrutiny of Shein as and when it files that long-awaited prospectus, which I'm told is going to be happening fairly shortly.
Yeah, and there's also a lot of criticism, isn't it, saying this is not the kind of company we want because, like I said, it's pretty much fast fashion, which is seen now as environmentally not sound.
I think it's a big challenge, and it's interesting after Primark, which is owned by FTSE 100 company Associated British Foods, there was a factory collapse in Bangladesh back in 2014, and the share price has taken most of a decade to recover because and we've seen what's happened to Boohoo's share price as questions have been asked about its sourcing. It's been an absolute catastrophe.
Boohoo and Asos. I mean, that's ABF. They've done well.
Yeah,
and if you look at Boohoo, look at this. I mean, it's
just
one of the best performing stocks out there, Asos, but they've fallen off. That's a heck of a roller coaster they've done there.
And I think some of that is down to I mean, ASOS probably overexpanded and went too much down the revenue at any price route and took on quite a lot of debt when it bought Topshop and Topman. Boohoo questions over its sourcing. Quiz has been kind of largely swept aside as well. I think that share price has got a pretty similar trajectory to those ones that you're showing now. And I guess you've got Shein and Temu coming up now. Looking at the competitive dynamic, I would think that ASOS in terms of price point is probably closer to Next. And so isn't necessarily in Shein's complete firing line, whereas Boohoo and Primark would be, along with Temu. So I guess it's interesting to see what Shein's going to do with £1 billion. Does that go to the owners? Does that go into the company for investment, brand, technology? I guess all of those questions will be answered in the prospectus, but we know it's a competitive market. Equally, there is a generation out there who are kind of pushing back on what they would view as overconsumption. They're going for more curated collections. They're going through Vinted and Depop and some of these retro sites. So it's not all one-way traffic in terms of fast fashion, but there's no doubt about it. Fast fashion appeals to a lot of pockets. It appeals to a lot of tastes, and it is currently a very powerful model. So now you've got to look at Shein and say, well, if that £50 billion valuation holds good, or $66 billion, last stated net profit was, I think, $2 billion. That's 30 times forward earnings. It's pretty beefy for a retailer. I guess you've obviously then got to be pretty convinced about the long-term growth prospects. You've clearly got to be convinced over the governance and management working for the shareholders or whoever. And you've got to make sure that in terms of the supply chains and governance that there isn't anything in there that could cause some potential challenges, because that 30 times rating would potentially contract pretty quickly if it's perceived to be potentially problematic for the company. So I think the transparency will be a very, very powerful thing. And if they can pass all of those tests, that would be great. We'll have to see what's in the prospectus and then what comes out of the roadshow and some of the documentation.
Yeah, these the sort of vintage or secondhand or pre-loved, whatever. Is it Vinted? And the other, what's the other one you mentioned?
Depop.
Where are they? Are they the US brands or the UK brands?
I think so. I don't know. My daughter is quite an aficionado of them. She doesn't do any of the fast fashion at all, interestingly. So I would assume so. But equally at the other end, you've seen some of the sort of luxury goods businesses like Net-a-Porter and Matches.com, some of those sort of rental models for ultra high-end luxury goods. Well, they've just completely failed, so again, at the other end of the spectrum, they've been finding life pretty tough as well. So retail is ultimately a simple business: right product, right price, right route to market, but it's an awful lot harder to pull off than you think. And Next has obviously been a shining example of how to get it right. Although even there, and their share price is probably not knocking all-time highs, but even there, they have been adding a lot of brands, a lot of third-party brands, so that it hasn't all been purely organic growth. There you go. The share price, the market's responded to what Lord Wolfson's done there over the last 20 odd years, effectively. So.
Yeah, you think? I assume they have. I assume they're all doing with these similar kind of things, or maybe even trying to acquire something like Vinted, or something like Boohoo or Asos trying to acquire them. You think they'd go in that route, wouldn't you?
Yeah, I mean, there have been rumours that people have been sniffing around ASOS, and I think Mike Ashley, as we know, at Frasers Group, is not frightened of picking up an asset that has fallen on hard times. So it's always something. It's not something that you can rule out. And Next has made acquisitions. And Frasers has made acquisitions, and they have picked them up at generally pretty low prices as they've faltered. So again, that is a possible angle for them. Markets always are quite happy with acquisitive growth so long as it supplements existing momentum and isn't a big transformational deal that tries to create momentum where it isn't there. And I think that's one thing that Next has done right, and actually Frasers so far has been doing pretty effectively as well. Intriguing.
Fraser Group have been, I think that he's buying both Boohoo's at 23 point, when was it, the 8th of May, 23.1% of Boohoo. And I'm sure he's got a round about that in ASOS. So,
and he's just been topping up his stake in Hugo Boss and one or two other bits and pieces as well. So
what's he playing at then?
Well, I guess a man who likes a bargain, I guess, is the argument.
27% in ASOS.
There you go.
Yeah, wow.
But he doesn't have control with those stakes, but he clearly potentially has boardroom influence. And he clearly feels perhaps there's a bargain to be had there, which in the end, again, is what a lot of shoppers like to see.
Yeah, and in fact,
I mean, whether Shein's a bargain at 30 times historic earnings, I guess again you're clearly going to be factoring quite a lot of forward earnings growth there. So
yeah, I know a lot of people are playing Boohoo and Asos hoping for a recovery, but the actual play was Fraser Group. I mean, look at the share price of that. Yeah, it's like it's done really well.
And again, if you think about it, if we are going to get interest rate cuts this year, and I think that's now been sort of slightly shoveled back to September from the Bank of England, with maybe one more by Christmas. If you are looking at interest rate cuts, then consumer discretionary will be one of the most sensitive areas to that, you would think. And if you look at retail stocks, you think, God, it's been absolutely awful in the UK economically for the last 12 or 18 months. But retail stocks have actually been pretty good, because we've had the energy price gap come down, and it's going down again by another 7% in July. And we got this prospect of interest rate cuts and inflation has cooled. Although, I think I think the one thing you need to bear in mind there is that since Boris Johnson won the 2019 general election, the UK Consumer Price Index is up by about a third. So if you're wondering why things still feel expensive, even though inflation is now officially cooling at 2% and a bit, that's why. The cumulative effect of that inflation, prices are not going down. So that purchasing power has been lost. And I think that is still a potential challenge for some retailers out there if you don't get the formula absolutely spot on.
Yeah, there's the 2-year government bond there, UK.
I mean that's normally 6 months ahead, 6 to 9 months ahead of the Bank of England, right? And it's kind of, not
0.375. So and it's struggling to get above that 200-day, which is good. It's broke down through that 200-day moving average, and it's 1 day where it's banging down below it. That's quite good. I tell you, it's quite positive though. I heard, I don't know where it was. I heard an interview with Raspberry Pi. Chairman owner, and he said he was, he was wine and dined by the New York Stock Exchange or Nasdaq. I don't know which one it was, but also the LSE, and he said he preferred LSE. He said their offering was nicer and better, and they were more in touch with them. It was more.
Well, that's good to hear. And obviously, if you get a couple of successful deals, then that might encourage more. And I guess that we've always then got to be careful what we wish for. I mean, one of the UK stock market had reached an all-time high in early May. And one of the reasons why there was the substantial amounts of cash that were being returned to shareholders through dividends at about £80 billion this year, buybacks already at 35 billion, and takeovers at around 35 billion with a few special dividends on top. So you're talking 140, 150 billion pounds. That's a cash yield on the UK market of 6-7% or something. You've now just had National Grid announce a £7 billion rights issue. And if the number of IPOs picks up, then that's actually cash starting to go the other way. Now, it doesn't mean that it's game over, but you've got to be a little bit careful that a healthy number of deals doesn't become an absolute deluge, because that's when, bull markets end when the money runs out, right? So if you've suddenly got more rights issues and IPOs than you've got dividends and buybacks and special dividends and takeovers, then that's when trouble tends to begin. But nevertheless, at least potentially, but we're nowhere near that yet. But it's something that's always worth bearing in mind.
Well, there's the FTSE 250 in bull market territory, way above it. In fact, AIM got into bull market territory. It was 803, but it's just dipped back. I mean, it's a strong rally, so you can forgive it for
that's a huge rally there.
So but 803 is bull market, pretty much 20% up from the low, and it's now at 800. So it's going to go sideways for a while. I think after that, look at all the greens there. It's literally 3-4 days down days in about 20 odd. So
wowza.
it's going to have a bit of a pullback and a consolidation.
Well, I guess the UK is probably going to paddle around now until the general election result, isn't it? I would think on the 4th, 5th of July. I would have thought personally, particularly, you can't see the Bank of England doing anything ahead of the election and rocking the boat. So then you're looking at August, probably September. So I guess we'll just have to. And also, I think the Bank of England did I think Andrew Bailey gave a speech when we were away last week talking about further quantitative tightening and what will happen and continuing shrinking of the Bank of England's balance sheet. So they are trying to, throttle back on some of the stimulus that's been applied over the last 15 years, which for the long-term health and for inflation is a good thing. But it might mean a little bit less cheap play money in the short term for financial markets.
Yeah. Okay. Marvelous stuff. Russ, thanks for that. We'll speak next week.
I look forward to it.